Welcome to another episode of the Wealth Building Strategies podcast. I'm your host, Jeremy Constantino, and today we have an amazing guest that's joined us, Mr. Damion Lupo. Welcome.
Hey man, so good to see you. It's great to be here.
Yeah, thank you so much for being on this podcast. For those of you that do not know Damion is a best-selling author. He's got 4 books that he's an author of. Unicornomics is one of them. Reinvented Life. We got the QRP book, which I just read, and then I haven't started yet this other one, the Guide to Gold and Silver. So, got a couple of your books. I've just read one of them. Impressed so far. I got my work to do with the other book. And then most famously, you are the founder of the eQRP company, which you founded in 2012, and you already have 2,400 clients. So congratulations on your success and welcome to the show.
Thanks, man. It's interesting. I always laugh when people talk about where they're at in their life and or how people perceive whatever the success is, because it seems like things happened overnight for everybody. And people are like, well, how long have you been doing X or Y? How long has the company been around? And like, how long did this take? And I'm like, well, about 25 years, because that's when I started screwing things up with the first of 65 businesses that I've started. And it just makes me laugh. It's like Justin Bieber was this rock star success at 16, and he started when he was 4. So, there's the 12 years that people didn't see when he was playing a guitar in his living room with his parents. And I think that's one of the things that I really look for with people, like in general, whether it's partners or employees or whatever, like how long are you willing to be resilient and commit to whatever you're doing?
Yeah, I love it. Yeah, the most successful people out there, the general public just sees this image of success and they just assume it happened overnight.
It's a really dangerous assumption. And I think a lot of what's happening with social media is that people perceive that the highlight reels of whatever they're scrolling through to be this easy thing that happened. First off, those are mostly fake because it's a highlight reel. It's not the actual depth that, the deep dive of the story. And whatever that projects is something that in all likelihood, if it's real, like you see a lot of people that are racing around, like there's a guy named Ty, and we'll leave it at that, but he, a lot of Lamborghinis and things. And a lot of these things, when we see them, they're leased lifestyles that we see, and the successes are laden with debt, and so people are buried. But it's an ego pump, and the people that are super rich and super free generally are invisible. You generally don't even know that they're out there, and they blend in next door to you, and you're like, oh, and then they die, and then there's this $400 million estate, and people are like, what? Who was that? And it's like they were somebody that was truly free and humble enough that they didn't need to tell you.
Yep. So just like myself, you're the host of your own podcast, the Financial Underdogs podcast. And so you have the podcast, you've written these books, and it's all for your mission. And so your mission is to free 1 million from financial bondage. And that I wouldn't say that's my specific mission as well, but that is the reason why I've started a podcast as well, is to help people understand how to diversify their investments and how to really break free from a lot of these chains that has been, I don't know if it's intentionally in the intention is there to bind us. But let's dive into that. And I guess before we get into your mission and what you want to accomplish, let's kind of go back up, like talk about the struggles, I guess, and talk about your work to get to where you are right now. And I guess how did you get into real estate and how let's get to know Damion.
Yeah. So what's interesting is you mentioned something about the financial bondage, and if you think about things that are common in society, one of the most common things is a mortgage, and mortgage comes from the Latin word mortere, which means until death. And our entire system is set up to keep people enslaved, which I think debt and our money system is modern day slavery. I don't think like I see California and Governor Newsom talking about doing reparations for African Americans, and it's a $233,000 check for every one of them. And I'm like, you're missing the point. The whole country is enslaved based on the money
Wow.
system. It's not like spending $600 billion is not going to free anybody. I mean, I don't care if you write somebody $1 million check because they have no financial literacy and no skills. And I remember just almost 40 years ago when I was a kid being told we didn't have enough. The problem in society is that we're taught these ideas of scarcity, and then we basically think that we're stuck, and then we fall in line with the Wall Street and the institutional systems of keeping us enslaved. And that was part of my training as a kid. You don't have enough, we don't have enough. And so it pissed me off. So I started a business when I was 11, hired my parents, and that's how I got rolling. And then when I started doing real estate, it was really just because I saw an infomercial and read a book called Rich Dad Poor Dad. And I thought, oh, you know what? I could go do something where I can create assets. And so I blindly stumbled out there, followed somebody's path, their model. I modeled them and started buying real estate. And I charged my first house on a credit card. And is that a good idea? I don't condone that. Like, that's a stupid idea, by the way. But sometimes entrepreneurs, in fact, many times entrepreneurs do stupid things because that's what makes us entrepreneurs. We're willing to do things that everybody else says are crazy. I mean, look at Elon Musk. That dude is crazy, and now he's the richest person in the world. So you got to have a little bit of crazy in you that doesn't make any sense to your friends and family and neighbors. And so when I started doing that stuff, in the beginning, it was all about making money and creating this wealth. And then when I lost that in 2008, went from 20 million to negative 5 million in 12
Whoa,
months, like a $25 million swing, and was homeless, living out of my car.
whoa.
That was a reset. It was the universe saying, it was kind of a God thing saying, yeah, wrong focus, dude. You need to start thinking different. It's not about you, it's about the people you serve. And it was in that time where I started reflecting and realizing that my mission is not money. My mission is serving others and taking everything that I know how to do. This really hit me when my dad, right before he died, when he and I sat down and we were talking, and he only had a few weeks left to live. And he looked at me and he goes, there were so many things that I wanted to do. And it broke me because I was hearing his regret. I was hearing the regret in his voice. It was like tattooed in him, and it burned into my heart and my soul. And I realized that he had hesitated for years and years and years, especially when he retired. He hesitated to go live and do the things like going to Africa on safari and going to his homeland in Italy that he never did. He hesitated because he didn't have the resources, and the resources he did have, he was scared to use because he didn't understand money. And then it dawned on me that that's the entire population. People don't understand money. They're enslaved by the ideology of Wall Street and people that just harvest them like the Matrix. And I started thinking there's got to be a way to lift people up and empower them, not give them money, but give them the courage and the tools. And that's where this transformation started a decade ago, where the focus became less on Damion making money and finding ways to serve people. And then I realized Zig Ziglar was right when he said you can have anything you want if you help enough other people get what they want. So that's where this came from. And it was really about switching gears from what's in it for me, WWIFM, because that's what people are taught. Okay, we're a very hedonistic society, get what we can, take what we can. And you see a lot of that in all the scams with Sam Bankman-Fried, with FTX. You see it in all the different indictments that are going on. People are just looking to take and steal. And when I say people, I'm talking about people, whether you have a job and you're doing just enough to get your paycheck, or you're out there screwing people over $50 billion. That's a taking philosophy. When you go into it, when you shift your personal philosophy, like Jim Rohn talked about before he died, you shift into a place of serving others and lifting them up. It's unbelievable how much wealth and freedom you create for yourself as a byproduct, not the focus. And that's where I think that's the thing that everybody can start doing more of and do better with, is finding ways to serve and lift people up, like you are right here with your podcast. You're giving to people, and guess what's going to happen? A side effect of receiving, and that's how it works, in my opinion.
Yeah, that's a phenomenal story. And I wouldn't say I had a downward disaster kind of like you had after '08. My story is that I succeeded in real estate, succeeded as also as an engineer with Chevron Oil and Gas for many years, and I was able to leave my W-2 job and have money from my income coming in. But what happened was I was at a place with my family where we wanted to give back, but we just didn't know how. And so we actually tried to get involved in ministry at our church, and for some reason it just didn't work. And so I got back into real estate, but I was missing that purpose. I was missing that why. I was like, why am I getting back into real estate? Just to get more money? Just like that why. But that why just has started to click in this last year, in that anytime I speak on a podcast, or I've written some books, or anytime I do a blog, or any post on Facebook, if that impacts one person out there from getting out of that stock market and getting into real estate, or taking control of their finances, or even just basic financial education, income and expenses. Like we're talking like basic stuff that the normal population of the United States doesn't even know. So anytime I speak or anytime I have a guest like you on this podcast, it's like I'm making a difference in the world, and that's my why. And so now I'm on a whole other level. Like it doesn't matter if I have more real estate sales, if I don't have more syndication deals. It's like, no, I'm impacting every single person out there, or I'm trying to impact everybody out there. But if just one person makes a change, I've succeeded, and that's a huge drive.
That reminds me of the story of the starfish on the beach. You know, when the little kid is taking starfish and throwing them in the water, and the adult comes up, and the wisdom of being an adult when you lose track of being naive and open, and the adult says, "Why are you doing that? There's literally millions of starfish out here. You're not going to save them all." And the kid looks up to the parent or the adult and says, "Yeah, but it matters to this one," and throws
Yeah,
another in. And
yeah,
that's the same thing. Every human that you touch, every heart that you move it makes a difference, and
yep,
it's part of our purpose. And I think people miss that. They're trying to get it all. They're trying to get to the end. They're missing the journey. They're missing each of the fish, the humans that they're touching. And when you slow down
yeah,
enough to realize that every impact matters,
yep,
it starts to create this deep fulfillment versus the success that everybody's trying to find, where they are going to be financially free and then they're happy.
yep.
I remember I was watching a girl named Nightbird on I think it was America's Got Talent, and she made a comment. She died about a year after she got the golden buzzer by Simon from cancer, but she was up there literally with stage 4 cancer, and she's singing, and she said, I don't think we need to wait until it's easy to be happy.
Mm.
And I remember tearing up and hearing that.
Uh,
And I've watched it, and I get emotional every time, because here's this lady, this beautiful soul that understood that there's in the face of literally overwhelming odds. I remember her saying, I've got like a one, or it was a two or something like that, 2% chance of survival. And she goes, 2% is not zero. And she's smiling. You could feel her heart and her spirit. And I just went, you got to be kidding me. So what is my concern? What is my problem? What is my issue today? And I was like, I don't have one. I don't have any problems.
exactly.
And then when she passed away, I thought, wow, what a model, what an example to look at and live. Like we're breathing, we're above ground, and that's a success, and that's a success every day for us.
Exactly. All right. So Damien, you're my first guest. I think we're at number 25 episode of this podcast. So a new podcast. You're actually my first guest as an expert in the field of 401ks, retirement plans. So let's jump in. So I guess my first question to you is, what's the problem with the current structure in the United States regarding how the retirement plans are set up? Like what's wrong with the current scenario of uh, you got a good job, you got your W-2 income coming in, and our society says save 10%, save 20%, the company's going to match you 8%. What's wrong with that?
Well, I mean, it's funny that you ask what's wrong with it, because it depends on who we're talking to. There's nothing wrong if you're Wall Street. Like, it's a great system, and protect them and make them rich. If anybody watching, listening thinks, or like remembers hearing a financial advisor, what does a financial advisor say to you no matter what's going on in the stock market? Put more money in and hold. Don't ever do anything different. It's for the long term. And why do they do that? Because their entire life is based on those fees that they get, and they don't really give a crap if the stock market's up or down. In fact, if it's down, they tell you to dollar cost average and put more money in so you get a better basis, lower basis. And if it's up, they're like, great, don't take it out because now you're riding high. There's never a good time. It's literally like it's more tier. It's until death. So why is this a problem? Well, one, you don't learn anything if you're investing. You're a typical 401k or traditional or like the trapped 401k and these retirement accounts are stuck on a roller coaster that you can't control. You don't really have. I mean, look, if you're talking about having control because you can choose between 5 different mutual funds, that's not control. That's like you're in prison. Which thing do you want on the slime line? You can have like the fake beef or the fake chicken. Like, okay, that's still prison. It doesn't matter. You can call it, hey, look, I have all these options. So we're basically, people are in a prison. They don't have control. And here's one of the most dangerous things that I've seen over and over again. Jeremy, when people they reach out and they go, "Hey, I want some help." I'm like, "Okay, well, what do you want help with?" They're like, "Well, my money. I've got a couple $1 million. I retired. I have no idea what to do with it. I had this 401k. I've got this cash, and like I don't have any." Basically, what they're saying is they don't have any skills. our system is not set up to empower people. It's to keep them basically like as indentured slaves to Wall Street. And there's another option, but it requires work. And people are literally tapped out and they're like, well, I've got a financial advisor. No, you don't have a financial advisor. You have a financial salesperson that's selling you crap that basically is in their best interest. And it's probably not in your best interest because they're selling you a roller coaster. They're not selling you any certainty. Well, here, they're selling you certainty that you're going to get feed to death. Like John Bogle, the founder of Vanguard, before he died, really irritated Wall Street. He said, there's something wrong with the system when the investor, you guys, are putting up all the risk capital and you're ending up with 20% of the returns after fees and taxes. Like it's a terrible system unless you're Wall Street. So our system is set up to keep people enslaved and dumb. You don't have any idea what's going on. You don't have any tools on the other side. And by the time you realize you need to do something, it's so far. Like when somebody shows up at 55 years old, they're like, oh, I retired early. I didn't have to wait till I was 60. Well, now they're so afraid that they're going to lose their money and they know that they don't have another 25 or 30 or 35 years to recover it. They go into a space of absolute fear. They hand it to a financial advisor and their instructions are don't lose. So you have people that are now in a situation where they're like playing super, super safe. They think maybe with bonds and then interest rates go up and then their bond portfolio gets hammered. And they're like, well, what happened? I thought this was the safe route. And it's because they have no financial literacy. So the key to the game is financial literacy. 401ks don't do anything with financial literacy. They keep you trapped in a system that feeds the system, not you.
It's amazing that the financial advisors are not compensated based on the success of the company and the success of the stock going up. They're compensated based on how much you just keep on buying in. It's insane.
Well, and here's one of the funniest things about it. I'll hear a lot of people say, "Well, my portfolio went up this last year," and I go, "You know why?" And they're like, "Well, I think the market went up," and I'm like, "No, ding dong, you actually put more money in. That's why your damn portfolio is up. It's not because it actually increased in value." And they're like, "Oh, you're right," and that's that people mistake the upward. They think it's going up. They're like, "Oh, it's up 6%." I'm like, "No, but five of that was you putting your money in, and you literally made 1% when the stock market maybe made 8 if it went up. Like this year, it's been terrible, and in reality." You're losing 80%. It's not me saying that. John Bogle, the founder of the biggest S&P 500 index fund in the world, this is what he said. So don't listen to me, listen to John Bogle. I mean, the guy knew what he was talking about. And people don't really realize that. They kind of go along because we're busy and we're trained to stay busy, to be chasing things, to watch football, drink beer, chase your kids around, all their stuff, and then just keep putting money in your 401k and don't think. I think well, in fact, I know there's a better way, and it's called being engaged. And that's what we've been doing for the last decade, is giving people options, as you know, to be in control. And I think a lot of people really are concerned that if they were in control, they'd blow themselves up. So they go, well, the smart people with all the credentials that they don't even understand are the ones that should control my money. And that's abdicating responsibility. That's not delegating to an advisor. That's abdicating. That's being a big sissy. You know what? And if that hurts you because you're like, I'm not a sissy. If you're not taking control of your money and owning responsibility for it, you are a sissy. And you can change that today, anytime, by saying, it's my money, it's my life, it's my choice. I'm going to do it.
Yep. What drives me up the wall is as an engineer with Chevron and worked with many different managers with a big oil and gas company, that they're all accredited investors. They're very, very successful in managing large projects for an oil and gas company. Very intelligent managers, very intelligent peers that I have. And we would always talk about investing, always talk about the stock market. And they would spend time analyzing the financial data, the financial returns of these large companies that they're investing in. And what drives me up the wall is it doesn't matter how much effort or time you take to research a company that you're going to invest in the stock market, because your returns are not based on the actual performance of that company. Your returns are the stock market goes up just because people get excited, and it's a general stock market euphoria. It's an excitement. And then Elon Musk makes a tweet and then the price goes down. So the volatility is based on emotions, on fear, on just general public. It's not based on the actual amount of sales and production that a certain company is making. It's nonsense.
It 100%, like 111%. That's true. Like it's really interesting. People that study the stock market. I used to work in the Arctic Circle up in Alaska where I grew up. And I would sit there and on breaks, that's what people were talking about, their stock portfolio, what they were investing in, and as if they actually were becoming intelligent. In fact, funny story, I don't think I've ever shared this before. I moved up, I went and worked in the kitchens up in the Arctic Circle. I was with these 600 guys. I think there was 3 women and 597 guys. And we were all working, doing our thing, pumping oil. And my plan was I was going to be there for 3 years. I was going to save up $100,000 because you have no expenses, save $100,000, trade stocks, and retire at like 23. That was my plan. Like, it was a super smart plan from the wisdom of a 19-year-old. And so that was what I was going to do. And it's really interesting. I watch a lot of people going in and they're like, I've got this trading thing and I'm going to do a bot system and I'm going to do, and I'm like, you just bought a hack to financial freedom. There is no hack to financial freedom. Even fire this, financial independence, retire early. There's no hack because, and I watch people doing that with crypto. I've watched them do it with real estate. And a good friend of mine killed himself about 30 days ago because he
Whoa.
tried to hack a system and overloaded himself and was out there. And I'm writing a book called Never Enough based on his life and what I see people doing, where he had 20, $30 million and it wasn't enough. So he went out there and rigged the system. And basically it looks like he created a giant scam. Unfortunately, it got too big and he thought there's no way out except to kill myself. So he did. And I see people putting themselves under this ridiculous pressure by cheating and stealing and then trying to circumvent the rules. Like, you can't turn off gravity. And people think, oh, I'm better than gravity. I'm like, that doesn't even make any sense. If you want to be financially free, you have to build the muscle. You can't look through the window of a gym and get strong. And that's what people do. They go, oh, I look at the Wall Street Journal and I've got this newsletter and I'm going to buy this stock because Jim Cramer or Susie Orman or whatever gave me this advice. That's BS. If you want to be free, you got to do what you're doing, which is taking control and going out there and going to the gym of finance, like lifting the weights. And people in general think that there's a way you can like not do the work. There is no way to not do the work and be financially free. And even if I handed somebody 2 million or $10 million, even if I handed you an apartment that was cash flowing, you're like, oh, yeah, I'm financially free. The answer is you're not, because you have no idea what to do with it. And the biggest problem is you don't have the emotional intelligence or the spiritual intelligence to keep the wealth. You haven't created a being, a vessel, if you will, the context to hold it. You might have the tool, the apartment or the cash, but you have no idea how to hold it. And you're just going to spring leaks and it's going to be gone within a year or two. That's why all the lottery winners, pretty much all of them within 3 years, have nothing. In fact, they're usually in debt and bankrupt. And that's what people are doing with their money. They have an event. Like, the greatest advice I ever got in terms of like a big event, if you inherit money or you retire with a 401k, it's from my grandmother when my grandfather died. And she said, he told me before he died that a big event, don't do anything for a year. And that was one of the most powerful things, because you need to let it settle in, because you are not the same like you're not ready. When you go from, you got 100,000 and then you like retire and you've got 2 million, it is such a big shift. You'll go back down to your least common denominator. You'll literally drop down to the 100,000 because that's what you're used to, and you'll get rid of the rest. I watched my mom do this. When her second husband died, she got rid of all the money, the boat, the plane. She got all of it gone within a year because she wasn't the person that had a boat and a plane and a financially free life. And it was really sad, but that's very, very common.
So earlier I asked, it was a loaded question. What's the problem with the 401k? But however, the 401k structure can be wonderful if used properly. So there's the 401k gives the opportunity for the employee to do tax deferred, to defer your taxes to retirement, or you could do the Roth, and your interest can grow tax free. So that sounds fantastic. So how can we use the structure that we have, that the government has set up, for our benefit?
So with the 401k, what's interesting is every 401k is different. Most of them are very similar because they're structured by Wall Street and they're set up using the rules from the early 70s under ERISA. What's interesting is, like with the eQRP, it's a unique vessel that gives you actual control. You can say, okay, I don't want to pay taxes ever again. And there's ways to do that within a Roth eQRP. So every plan is built different. And most people don't realize they can control if and when they pay taxes, meaning you can choose. There's ways, especially when you start doing things with real estate or precious metals, or there's lots of different investments you can use, and you can use the tax code. So when you start talking about actual self-directed retirement accounts, I've heard some people like a friend of mine, Tom Wheelwright, has mentioned this. He doesn't like retirement accounts. He talks about it on Rich Dad all the time with Robert Kiyosaki. We hate 401ks, and I get it. They hate traditional 401ks. But over the years, when he's referred a bunch of people over to us, he's done that because he knows the power. I mean, I don't think he wants to say it publicly, but there is a really valuable tool if you want to go tax free and you want to invest in things like real estate and never pay taxes. The problem with real estate is like people like real estate. They go, oh, I don't have to pay taxes because depreciation. And I go, yeah, the problem is if you ever sell something and you can't turn it into some other asset, you have a huge tax bill
Right.
in all
Right.
likelihood. With a Roth eQRP, you're going to zero taxes forever. That's one of the reasons Congress is like, wait, maybe we should stop letting people do Roths. And it's one of the reasons I say everybody should have a Roth account now because, and not a Roth IRA. Roth IRA is a terrible place because you don't have control. With the Roth eQRP, this type of 401k, you have the ability to buy almost anything you want, and you're never going to pay taxes on the gains. In fact, you're not going to pay it, and your heirs aren't going to pay it. So the power of that, if you just think about that, I can invest in real estate or crypto or Jimmy John's or Papa John's or some John. You can invest in whatever you want, Bitcoin. Like you have all these options. You can move between asset classes. You don't have to do some 1031 exchange. And people go, well, that sounds pretty good. Why am I not told about this? I'm like, why would anybody tell you about this? They don't have any vested interest. They don't care. Syndicators don't really care how your money comes in as long as it's green, or I guess blue if it's yen or euros, but they don't really care. And your financial advisor is never going to tell you how to do something outside of mutual funds. And if they did, they're going to say, oh, only do 5% because you want to keep your money in the liquid stock market. Because hey, by the way, that's where I make all my money. So there's if you start looking deeper, and that's why I wrote the QRP book, you realize with some homework, there is a totally different system. It's almost like shadow banking. It's like lending outside of Wall Street and the banks. Like, wow, there's a really cool system here where I can control, make all the choices, pay no taxes. And people can do this for their kids. They can do this. I mean, the EQRP system allows families to put up to 700, just over $700,000 per year. So if you're like, well, I don't even make 700,000. Well, some of you do. And you're like, wait, I can put 700. Yeah, you can. There's a way to tax defer and then tax eliminate up to
Wow.
700,000 a year.
Wow.
If you go out there as an entrepreneur, you start creating income or you bump your income, it doesn't take that long to create wealth to where you own all your time. I mean, think about that. If you were putting away, just imagine for those of you that haven't done it yet, $700,000. How many years do you need to do that before you've got a pile, especially if you're learning how to invest and you're going deep into the investments? How much capital do you need to where you can be free and own all your time? And then you start creating infinite wealth. So you got to have better tools and you got to have better teams because most of the traditional tools and teams are never going to get you there. They're just going to keep you there wherever you are.
Yep. Okay, so to break this down for a lot of my listeners, this is probably a completely new concept. So basically, what we're talking about is the traditional 401ks, kind of, it's called traditional, is mostly controlled by Fidelity, Vanguard, and you have your options of your mutual funds in general. Some
Right.
Fidelity accounts, they'll maybe let you, okay, now personally invest in Apple, Tesla, and you can start choosing. So I consider that traditional. What we're talking about here is really self-directed, where the employee now, or the employee, or you could be a former one like self-directed IRA or self-directed 401k. Now you have the ability to invest into hard real estate assets, to gold, silver, and I think I was reading in your book life insurance. I mean, who would ever thought that? So now we're talking about self-directed. Um, so I guess, and then now in the self-directed world, when you break that down, now it's self-directed IRA. So you can roll over a previous IRA to a self-directed IRA, or you could set up a self-directed 401k if you are an employer, or if you're a part-time employee. I guess if you own your own business, you can set up a 401k for yourself and your employees, and that could be done in a QRP. So that's what your book. So I guess, what does QRP stand for?
Yeah. So here's the funny thing that people don't realize. They Google, and by the way, Google's not your friend. Google will tell you whatever you want it to tell you. Like you start doing your search and it'll give you what somebody is paid to put in front of you. It's not the truth. I mean, let's just be honest. Google is an algorithm based on trying to get you what you're trying to get. And what you're trying to get is corrupted by your biases. So you type certain things, it'll give you things a certain way. Self-directed in general, in large part, a self-directed IRA is not a good tool for most people because you are stuck. Self-directed IRAs, there's requirement for a custodian. Some people say, "Well, I've got checkbook control." By the way, that's illegal. That is literally against the law because the tax courts ruled it illegal in November of 2019 in the McNulty case. So that's off the table. That's not even self-directed. You don't have control. If you do real estate with self-directed IRAs, in all likelihood, you're going to pay a 37% UBIT tax. Bad idea. So if you've got a self-directed IRA and you think you're in control or you think this is great, I've got real estate, you really need to educate yourself because you may have a giant tax bill coming and you really don't have control. And Congress is going after self-directed IRAs because there's been so much abuse. The alternative is self-directed 401ks. Now, what people don't realize is I've seen this a lot. People are like, oh, self-directed 401ks. Like I can go to Schwab and get a self-directed 401k. And I'm like, yeah, you can do that. And they're free. And guess what? You have absolutely no control. No, I can pick my stocks. I'm like, exactly. You have no control other than picking Apple or Tesla. That's not control. That's like being in prison with your spam or your fake chicken that's Tempa. Like whatever. Like you don't really have control. You're just in a slime line. So there's the other option is a self-directed 401k, specifically the eQRP that's dynamic. It's the only one of its kind in America where as an individual, you have control. You can take your IRAs, 401ks, your pension plans, you can roll them in, whether you're an individual, whether you're an employer. If you have 1,000 employees, this works for you as the owner and all the employees. Like literally Chevron could set up an eQRP. It's a safe harbor eQRP, but they don't do it because they're pitched by the financial system. And they're like, it's easier for us to just not worry about this and then keep our people trapped and go, great, we get matching money. So the self-directed space, it comes in a lot of different forms. And the eQRP, the Enhanced Qualified Retirement Plan, is a unique type of that. Qualified plans in general, which basically just means tax shelters. It's part of ERISA back in the early 70s that was set up to give, basically this was taking pressure off the pension system. So in the 50s and 60s, you had all these companies that had all these pension programs, probably like Chevron and a lot of these big corporations. And they say, we'll take care of you. And so you put money into a system and part of your compensation is you get a pension when you retire. The problem is it got very fat, meaning it was a fat bloated system that these companies were like, we can't possibly we can't pay on the promises we made. So they said, let's switch it. So the companies went to Congress and said, let's create this thing. Let's create ERISA. And this will allow the burden to switch from the companies to the individuals. So now everybody, instead of having a guaranteed $5 or $8 or $10,000 a month when they retire, now they just have a big pile of $2 million or $3 million in their 401k. And you retire, and all of a sudden you're supposed to be an investor with no training. That's it. Our system was set up it was set up for people to fail back in the 70s, and people don't realize it. But that's what happened. And so then now it's very cool that we have these options for self-directed retirement accounts, but they're not the same. They're very, very different. And most people people just don't realize this because where would you ever learn? Fortunately, there's opportunities for people with podcasts like this show here because otherwise, nobody would ever know. People don't go to Amazon and go, I want to read a book on self-directed retirement accounts. That is not what happens. People are like, I want to read Harry Potter. Like, that's what's interesting. And then they're like, well, I've got my S&P 500 and I'm trading Tesla and I feel rich. And then they're like, wait, but now I just lost 40% and I feel poor. So there is a shift. And that's why I wrote the QRP book a decade ago and why we give it away at QRPbook.com, where people can get a copy because we're an educational and transformational company. It's about empowering people, and then people decide, am I the type of person that's responsible for my life? And that starts with people reading. Like, we don't want to work with somebody that says, I'm not going to participate in my life. That's not the right type of tribe member to us. What's the right tribe member is somebody like you that says, I'm going to go read the book, I'm going to educate myself, and we love that. It's our culture. It's who we are.
So I started investing in 2000. I started investing in real estate in 2005, and then I left my W-2 job with Chevron in 2015. So what's that, 7-8 years ago? And during that time, the 7-8 years where I'm no longer with Chevron, I still was enslaved. I still had this idea that I needed to have that 401k in the stock market. And so this is coming from me, a real estate professional. I'm still like I'm still shaking and nervous about walking away from the stock market. And it just wasn't until just last week where I was done with it. I finally completely out of the stock market, done. Last week I invested into a land development deal, a private equity land development deal. So nice. Yesterday I subscribed for a short-term rental fund, and then I'm starting to look into doing some gold. So I have this nest egg that was so hard for me to break with that stock market. And so I could sympathize with everybody else. I mean, I'm a real estate professional and I'm still being like, no. I really like that mutual fund. But it's all lies. Like I don't know why I don't know why there's that struggle. I know it's funny money. I've heard you say it's the stock market casino. Like I know that, but still, somehow it was still hard for me to part and to walk away from it.
And this is normal. And why is it normal? To me, it's the same as when people are addicted to McDonald's or whatever we eat. So Wall Street is the same as manufactured food. It's Frankenfood. Wall Street is manufactured. It's sanitized. So basically, Wall Street bleaches and makes something sanitized. You get your investments. And so if you like McDonald's as your core and you haven't watched Super Size Me and you think that that's a good diet, and I don't care if it's McDonald's or
That's
if
a
you
good documentary. Super Size
yeah,
Me.
it's a great documentary. Like, and I've never said this before. I was just thinking about this as we were talking about Wall Street and stuff. When you go to the grocery store, if you work and you shop out of the middle of the grocery store, you're basically in Wall Street. It's all the marketing, all the packaging. That's what your life is all about. It's about being influenced, manipulated by systems that are keeping you trapped, fat, stupid, bloated, like and unhealthy. And the alternative is you go around the edge of the grocery store. Well, when you look at an avocado, is there a label? It's like literally you can tell this is like God's fruit. Like there's something authentic and real about that. And you're like, okay, well, what's the organic one that wasn't, what's the heirloom one? And if you don't know what I'm talking about, you're like, what's an heirloom? It's like real. It's not sanitized. And that's when you talk about going and investing and you're investing in private placement and you're doing short-term rentals, you're looking at gold, you're looking at real things. These are organic things. And anybody that argues that organic is not worth more than the packaged, boxed, processed, sanitized crap is literally a zombie. Because the reality is, there's nobody that I've ever met that would say, I would rather have manufactured food than organic food. Well, the same thing with investing. Why would you have something that's not organic that you can't go talk to the operators, that you can't go step on the dirt? Why would you go buy a gold ETF when you can actually take physical possession of physical gold and you can hold God's money? Like why? And it's because we're trained. Like you said, you're like, I don't know why. I mean, I'm a real estate professional. This is what you said. We've heard that a million times. You're not the first one. I mean, it's like real estate agents show up. I mean, we have real estate agent members of the tribe that have been selling real estate to investors for decades, making millions and millions of dollars in commissions and making their investors tens and hundreds of millions of dollars. And you know what their investments are in? Freaking mutual funds. I'm like, what are you doing? And
Yep.
it's because the mindset and the skill set are very different from the business and the entrepreneur to the investor. And you have to cross that line. It's like the blood-brain barrier. Like you got to cross it. It's freaking hard. Like that, there's a reason that's so powerful, that barrier between the body and the brain. It's to protect you. Well, that's kind of the same thing. Investing, you can't use the same skills investing as you do as an entrepreneur. You don't invest everything on red or black as an investor. You have a portfolio allocation. You're smart about things. Because you know you're going to take shots. As an entrepreneur or an employee, it's very different, especially as an entrepreneur or real estate professional. You can go out there and try things and blow yourself up. You're like, okay, well, I'll just do it again. But that's different with investing. And people, there's a this is why it's so stupid for people to have a mutual fund. Like in your case, you had this money in the mutual fund. You were smart enough to start doing real estate years ago, but most people go from zero to hero and then they end up being the villain. They're like, oh, I just blew up all my money. And they have no idea why, because they had no skills. They never spent any time developing that. And kudos to you for doing that over the last 2 decades.
Yeah. So going back to what I was saying about with Chevron, my peers, they have such a deep understanding of analyzing prospects for the drilling oil wells. So they know how to do all the economic analysis on their return on investment. And so you even if you did that in the stock market, it doesn't matter. But what I just did right now in analyzing, like you're saying, the general partners and the operators for this land development deal, they have a webinar. They talk about their projections. They talk about how much they're going to be selling each plot of land for. You can, like you're saying, you can go on the dirt and actually go to the place where we're going to be buying that land, and you can go visit the operators. You can't do that in the stock market. I mean, come on, seriously. And then your return is based on pro rata, in most cases, pro rata of what equity you bought in and you get back. It's very simple. There's no outside force acting on these private syndication deals that's going to impact your return. So so I'm sitting there doing that with the land development deal. I'm doing that with these short-term rentals. And but it all goes back to what you're saying is I only can do that now because I understand how to underwrite deals. I understand the terminology. I understand IIR. I understand the ROIs. I understand all that, which a lot of people don't understand. So yeah, the education is key. And if you go your whole life without understanding basic economics and basic P&Ls, it's unfortunate.
Well, it's I was thinking about what you're talking about with the people that are highly skilled, like with Chevron, and I see a lot of this that we have a member that worked in oil and gas for years, and what's interesting is when you say, okay, how do I take that skill set and apply it? Well, you got to do something different than just reading a P&L
Yeah.
from some company that's been sanitized by Wall Street or been bleached by Wall Street. The one of the best places I know to go to is the New Orleans Investment Conference, because you deal with real operators that are in mining and oil and gas and agriculture, and like real, and guess what, you get to use your skill set because you can go talk to the operators, you can go to their sites, you start working with real people. And like when you go to those environments, you realize, oh, I can invest in a space that I'm familiar with real people. It's not just a 10K or one of these documents where I'm supposed to invest based on whatever crap they made up and lied about with their disclosures in the footnotes. And that's really what a lot of investing is. You're like looking at this overwhelming amount of paper that was created by bureaucrats and regulators, and you're like, well, I don't know. And then there's this overwhelm where people go, what do I do? They ask a financial advisor, what do I do? Or they see a snappy ad, or it's really unfortunate that our system is set up to where we get so overwhelmed we just give up. And so one of the things I would encourage everybody to do is to allow yourself time to grow. Like, you don't go to, unless you're a nut job and you take a big pile of steroids and decide you're going to grow your thing in a month. And I've seen people do that where they show up and they go, well, I'd like to create financial freedom. And I say, how long? And they go, well, like 6 to 12 months. And they have like 50 or $100,000. And I go, here's guaranteed what's going to happen. In 12 to 18 months, you will have no money and you will have an experience. It's called a seminar. And it's the seminar of you going out there and being impatient and reckless. Instead, the people go, well, what do I invest in? I got 50 grand. And I go, I can tell you when I started in 1999, I had no money. I probably had 1,000 or two as my float, my bank account. And I had a credit card, and I had enthusiasm and drive. And that's what allowed me to move forward, because what I realized going over the last 20 plus years is my brain was my biggest asset, not a big pile of cash. And people go, well, I don't have that much money. I'm like, you're literally defeating yourself. If you could take a retirement account, set one up, go make 5 or 6 or $10,000 and turn that into $1 million inside of 5 years, I guarantee you can do it, because I'm a college throwout, not a dropout. I got thrown out of college, and I went out there and with a high school education did this. I think I'm reasonably smart, but I'm not. I'm not a. I mean, I don't even have a college degree, and I went out. There's ways. I see so many people. The biggest problem I see is people are over smart. Like, I see a lot of doctors, and I'm like, you're too smart. Like, and what I mean by that is people's egos get in the way. They're not willing to truly be humble. They might say they're humble on social media, but truly they're arrogant, narcissistic nut jobs. And the reality is, if you want to become financially free, you have to be willing to be open and wrong and say, I don't know anything. And then you show up on podcasts and you show up at conferences and you network with people and you try things. Unfortunately, our system is set up to keep people stuck and just like hoping, smoking a bunch of hopium, and that's their strategy. Like, that is not a good strategy.
Yeah. When people ask me, Jeremy, how do I get involved in real estate investing? I just say, look, there's some books back there. Start educating yourself. Start listening to podcasts. Start going to the conferences. Start networking. And yeah, and spend some money getting into a good mastermind. I got in a great mastermind right now, and um, yeah. So how are we doing on the freeing 1 million people from financial bondage? So where are we at on that?
So what's interesting is we're in the middle of the journey, and I say that because it's like, how do you know how many people you've impacted with Financial Underdogs, the FU podcast, and the going on a stage in front of 500 or 1,000 people. Every time that happens, maybe it's one person, maybe it's 100 people, and then that one person or those 100 people, there's a ripple effect. Maybe one idea, they implement that, and they start going down this path. So where are we at? I have no idea, and I've never done. And that's it's
Love it.
there's in Reinvented Life, when I wrote that book in 2012, it was really, what did I learn over the last 10 years of making a ton of money, a lot. I mean, it was tens of millions, and then going to negative, 5 million. And like that, I wrote a chapter called Success versus Fulfillment. And success would be, once we hit the million, we're good, we're done, we're quit, we're like, we're out. And fulfillment is, I'm enjoying every day and every starfish that I throw back into the water.
Awesome.
That's the
Awesome.
difference for most people. When you find the fulfillment, then everything changes in your life, versus the success moment that's really fleeting.
So you're writing another book. What else is next for Damion?
We're building. It's funny. There's when I say building, we're building a manufacturing plant, and it's to disrupt the truss and building industry in America with some automation that creates a ton of jobs. We're doing our part to build back America. I think there's some tagline that, I don't know, the administration said "build back better" or some crap, and that's a lot of lip service. What we're actually doing, my partners and I are building. We're helping to solve the housing problem. That's a big part of what we're doing with our investors, with people that see that they get to go play in the dirt, they get to see this thing come to
Oh,
life, become a huge employer, change people's lives. And so we're building this, and it's like one of those deals you're talking about, where people get
well,
to partake in something that they can get their arms around. They get to be a part of a solution. They feel good about it, and they make a ton of money. And guess what? Wall Street doesn't get to play. This is just for humans,
exactly.
human eyeballs, not
Exactly.
zombies.
Exactly. Love it. Well, Damien, where can the audience and the listeners find more about you and your company?
Best place to go is eqrp.com. Come
Okay.
visit, grab a copy of the book, and poke around, and set up a call to talk about your stuff. I mean, eqrp.com is really set up as a gateway into you being financially free and using the tools that are out there that really most people don't know about. And I promise you, if you Google, you will get lost in space. It's like a damn dystopian sci-fi movie. Like, you really, going direct, go to the source, go to, and I think that's true whether you're talking about a mastermind or a seminar. It's really, first off, figure out what information you're looking for, and then make sure you're really careful about the sources. There's so much misinformation out there, and so what you'll find, and you have a copy of the QRP book. When you look at it, it's referencing tax code. It's easy to read, and it's all based on facts. It's not just conjecture or opinion. Like, it's truly the facts. And when you have the facts, like, I'm not going to make up facts, and you can fact check everything in the book, and it's all accurate. So that's where I think people should go. Go to eqrp.com and get a copy of the book, and let your journey start.
Awesome. Well, thank you so much, Damien, for coming on this podcast. And hopefully there's some listeners out there that we've helped break, one of those shackles and red pilled a little bit, a couple of you guys listening out there. So um, that's a wrap for this episode of the Wealth Building Strategies podcast. Thanks again, Damien, for coming on.
Thanks, Jeremy. Appreciate you having me.